This is the briefing for Friday, February 4th. I'm going to start today with the little bit longer term charts and the daily charts. I think that's a really good focusing point to begin the analysis, mainly because of the development of price, and it gives us a little bit more clearer picture, takes out some of the chop that we've been in for quite some time and the volatility. And you can see that the rotation that we were in for quite some time, and I've covered this previously, false breakout here, rotation, then a breakdown once again. Breaking through this 450 level in the spiders was really an important move, but then coming back through was really kind of threw a wrench in the analysis. Now, I think it was Wednesday's briefing that I talked about this, and the fact that before Thursday's trading started, I said that everything that I saw said that we should see some more downside before this is over, except for the fact that the S&P and the Dow appeared to be retracing at least 50% or better of the move from the downside into the January 24th low. So that was kind of the wrench that was in the analysis from Wednesday's briefing. And then Thursday, we did see a continuation of the decline with the indices, or I should say the spiders, trading below the 450 level. And then today, once again, they traded back above 450, but then closed right at it or just below it. So basically, what this is telling me is that there certainly is an interest in seeing the S&P and the Dow move higher, but the problem is the internals are just not supporting that move. So there is always a higher probability that price will correct to the internals. But that said, there is also a lower probability the internals will correct to price. So we have to keep monitoring the information that comes from the market to determine whether the lower probability is in the process of becoming a higher probability or not. Right now, I still think that the slightly higher probability is that we still have some more downside to do, even though the NASDAQ and the Dow Industrials appear to be wanting to move higher and appear in terms of price development only that they will go higher. Now, the intermarket divergences are still existing. They are there. I want to start right here with the Dow Industrials and the Dow Transports, and you can see the rotation the industrials have been in really haven't gone anywhere, going all the way back to September, towards the middle or end of September, and then they've paused. And this is a pretty big range. I think it's about 2,400 points, maybe. I think I did this the other day. We'd retrace, looks like about 50% of that, and then of course it looks like we're getting another sell-off. But the problem with this is that this move off of this low is not confirmed by the transports. This move was not confirmed by the transports. So that intermarket divergence, I think, is pretty significant based on Dow theory. Now, if we look at where we are in terms of the NASDAQ or the Qs, I'm going to the Qs now. You can see a little bit different scenario here. Here's the rotation, similar to what we saw in the spiders. Paused here, not above the resistance, but just at and below the resistance. And then, of course, the sell-off that took place. A pause right below the 340 to 350 area. And then, of course, this move up. But this level being about the 380, 381 level that is similar to the S&Ps or the spiders in terms of resistance has not even been approached. In fact, we're probably not even halfway through this range, even though the NASDAQ had a pretty good day on Wednesday. Thursday's trading was not so significant, and then of course today really was just within the range of yesterday's trading. 350 is a really important support level in the NASDAQ. That's going to open up a fairly quick move if it's traded through down to about the 340 level, and then below that is the January 24th low. I still see weakness in this market, and you can tell that. Just look at what's happened with volume. You can see this move up, and look what's happened with volume here. Going back to the spiders, you can see the same thing is occurring here. Volume really just falling off. So this move is not being supported by drawing additional participants in, and if it continues, then at some point in time we're going to see that break. We may have seen the break or the beginning of it Interestingly enough, even after the employment numbers this morning, the S&Ps or the spiders really could not trade much above this 450 level and did not take out yesterday's high, closing at or below it. Also, I should point out, this is the new 52-week lows minus the 52-week highs, and it worsened. I think last night it was a negative 37, and today it's negative 509. So the internal structure of this market is not strengthening at this point in time. That can change, but at this point in time, it is not strengthening. Going back to the Qs once again, watch this 350 level, very, very important level in the Qs. And finally, the Russell and the IWM, you can see it is not even close to where the S&P and the NASDAQ were. Once again, volume falling off pretty dramatically. 190 is support in the Russell and 205 is resistance. Now, if the Russell were to trade above 205 and the transports were to begin moving higher, I think that would probably be a confirmation that the S&P and the industrials are leading the way. But unless or until that time happens, and especially with the downturn we saw yesterday and today in the S&P and the NASDAQ, I really am leaning more towards the downside in this market, at least for the near term. And that can change, but all I can do is analyze the market with the information the market gives me today and the previous days. I cannot project what information the market's going to give me on Monday. I can use the strategy I developed from the information we have today for tactical and strategic purposes, in terms of if the market does this, I'm going to do that. If it does that, I'm going to do this. In other words, I'm going to be long or I'm going to be short based on my strategy, the higher probability assessment of one event over another, and what information the market gives me as it opens on Monday. Now, going to a little bit shorter term chart, this is the spiders on a 120-minute chart. And you can see a little more drawn out the rotation here. This move back above 450, almost trading up to the 460 level. That would have been a significant event. But then backing off pretty significantly. You see volume trending down. And of course, look what's happening with breadth. Market breadth is just absolutely collapsing. A little bit stronger in today's trading, and I'll get to that in just a minute. But still ending the day with negative 327 shares trading lower in terms of market breadth. In terms of the NASDAQ or the Qs, same situation. Look at the collapse in market breadth that occurred here. This was, I think it was about negative 2,500, 2,600 shares when this occurred. And then, of course, we had a little spurt up today. I think NASDAQ didn't really get the bump that I thought it would get from Amazon, but at least, it was positive 1,272 shares. But once again, not much movement in terms of price development. So this is still showing me some weakness. And in the Russell, you can see 190 is support, 205 is resistance. And going back to the NASDAQ, this is about the 355 level in the NASDAQ, down to about the 350 level. Really important support there. Resistance coming in at 380. Now, in last night's briefing, I discussed the fact that we had to expect some type of bounce in today's trading or pause, because we were at a point of being oversold in both the NYSE and the NASDAQ. And that's exactly what we got in today's trading. The only difference here is that breadth was not strong enough to bring the indices to an overbought condition in one day. Now, the NASDAQ certainly was pretty close to that, and you can see it worked off a lot of the oversold condition, but the NYSE really hasn't. So this gives at least the NYSE, or gives, I should say, both of these indices the ability to trade higher on Monday or continue the pause or rotation that we've been experiencing for the last 2 to 3 days. You can see that right through here. So one thing to watch for is watch for what happens in the spiders on Thursday's high. If that's taken out, then there's a chance this gap is going to get closed, and we could see a test of the 460 level. Watch today's low. If that's broken, that's going to open up trading down to the low on Thursday, and then that would open up the potential for trading through the rest of this range down to about the 430, 425 level. In the NASDAQ, basically the same situation. Thursday's high would open up closing the gap and then trading up to 370 and above that 380, and then trading below Thursday's low, the 350 level. I think that's Thursday's low. Let's see. That's today's low in the NASDAQ. So trading below that, right around the 350 level, would open up trading all the way down to the January 24th low and potentially taking that out. And the same situation with the Russell, trading above today's high with resistance at 205, trading below today's low at 195 would open up support down to 190, and that would raise the probabilities the January 24th low is going to get traded through and we're going to extend lower. So that's it. We're kind of in a range right now. This is a lot of chop through here, very difficult to trade, but boy, when we reach one of these support or resistance levels, we should be able to see a pretty good move in one direction or another. Just keep in mind these longer term support and resistance levels, because if they're broken, especially to the downside, it means that we're transitioning from one time frame into a greater degree time frame. And when you see a transition like that into a greater degree time frame, it typically draws in bigger money. So if it is to the downside, that means that bigger money is going to be moving probably in a risk-off position. On the contrary, if we begin to trade higher above these short-term resistance levels, that's going to suggest that bigger money is coming back in and buying, and we're potentially in the process of testing these upper extremes once again, or the all-time highs. So it's frustrating at times to have to sit through these rotations like this, but at least in an intermediate term time frame such as this, it's better to understand what's happening internally and what's happening in terms of price extremes. Have a great weekend. I'll pick this back up again on Monday.